Charlie and Jack Howe. Cheap oil continues to drag the market down, guys. A lot of worries about the implications, particularly from China. Is it going to either help or hurt that the Chinese government now injecting huge amount of cash, trying to save their markets? Kevin, to you first.
Well, you know, what's convincing about this market right now is that this has kind of been an orderly sell-off, especially in the face of oil, a stronger dollar, earnings recession. I mean, if we take a step back and look what's happened over the history in the last 3 years, I mean, there was a taper tantrum, spiked. Even last August, September, we saw the market blow out. But VIX is orderly. We're seeing bids come back. And you talked about beating up names. Look at the biotechs. The biotechs have been down over 18% since their height. They found the bid. They were the ones that actually led the market reversal. So once oil actually starts to stabilize and get a bottom, I think we could actually have found the bottom of the market.
Celgene looked pretty good yesterday, and a lot of the others. In the meantime, Archimedes, I think, is going to be down more than 50%. But Todd, I want to piggyback on this notion that this has been an orderly pullback. Is it true? Are we wedded to the old notion that there's got to be a classic capitulation, one of these sessions that trades 3 times the average daily volume, Dow down 1,000 points, everyone heading for the hills? Is that the ultimate buy signal?
I think that will be the ultimate buy signal, Charles. I think here's what you got to look at. As an orderly sell-off, as a bear, which I am, what makes the market, I'm on the opposite side of Kevin, is as a market, I want to see a nice orderly sell-off because we just keep going down and we go down in lumps. Yeah, we had a nice little bear market rally yesterday. Great selling opportunity if you're a bear. So the overall picture is it's the entire commodity space. It's not oil. You know, we're having troubles everywhere, which is creating job layoffs, which is creating a lack of growth, which will continue to drive these markets lower. Yeah, there'll be bargain hunting. There'll be all kinds of stuff coming in here. But overall, the whole system does not look well. The financial engineers are breaking down because they've built this whole market on artificial growth through buying back merger and acquisition. So I think we go significantly lower from here, but there will be rallies as we saw, and those are great opportunities to sell. So as long as it's orderly, I'm happy. When the capitulation comes, then it makes it more challenging to be short.
You know, Jack, here's the thing. I know there's a lot of debate about financial engineering, and what we mean by that are these large corporations spending billions of dollars to buy back their own stock. Now, you can argue that makes it sort of has skewed the market for a long time to the upside. The flip side of that, those individual investors have been selling these stocks. Does it really, either way, matter with respect to actual fundamentals?
It does matter. Companies, when they buy their own stock, are a lot like most individual investors when they buy stocks. Their timing is lousy, right? When do they buy a lot of shares? When their profits are high, when times are good, and when their share prices tend to be high. When do they pull back on that spending? When there's some kind of crash and a downturn in the economy, then they're not buying low. So they end up squandering investor money over time with a lot of these buybacks. Not every company does it, but many of them. I mean, I'm not impressed in the least with the repurchase activity that we've seen in recent years. I'd rather see a lot of that money go to investors as dividends.
You know, I want to get back on oil for a second, though, Todd, because as you were talking, you know, it strikes me that a year ago I came out and I said, listen, cheap oil is not necessarily a panacea. People kicked me and thought I was crazy or whatever. But at some point, you do also have to scratch your head and say, why would a cheap input like oil, gasoline, hurt balance sheets? Why would it hurt the American economy? Why would it hurt the U.S. Household economy? Why, at some point, isn't this not a good thing?
Well, because the real truth is, Charles, is we're really not working. You know, we look at the statistics. The middle class has really never come out of recession. The middle class is making, the ones that are working are making 10 to 12% more or less than they were making 5 years ago. So you're not getting the spending because average mom and pop don't have the money to go to the store, so they're not getting the car to drive. Plus, if you add in Amazon and online sales, it's bringing up less demand. And you add on one more thing, an unseasonably warm winter. We haven't had a big demand for oil, so it's slowing down the economy, plus the lack of jobs that it's now creating because we're not getting the major drilling or fracking going forward. So that's a lot of the issue. And I was always with you. Cheap oil does not make a better economy. We need good, solid fundamental growth through everything, not just through one product.
Joe, I mean,